Hey, hi, hello, y'all. I'm Bad Apple. Welcome to my channel, Bad Apples TV, where we discuss the misbehavior, misadventures, and overall shenaniganery of celebrities and public figures. We'll cover entertainment and celebrity news and gossip, music, film, and TV, pop culture events, as well as major trending topics in the news and social media. It's all happening, so grab a seat and let's talk about it. But before we begin, please do me a solid and like the video and subscribe to my channel. Now let's cook. So y'all, I want to talk about the FDIC and what's happening with DOGE. I know everyone knows what the FDIC is, but for those who don't, it's basically federal insurance for your bank account. It protects your money in case a bank fails. Right now, that protection is in danger. DOGE, the Department of Government Efficiency, is a fugazi-ass government agency created by the Trump administration. It's actually illegal, since Congress has to approve the creation of any new government agency that deals with federal spending. As we should all know, all federal spending and appropriations must be approved by Congress. So now we have an illegal organization making illegal decisions about our federal tax dollars. And the fucking convicted felon sitting at the Resolute desk in the Oval Office has handed all our personal data and access to the entire U.S. Treasury Department over to DOGE, a group of mostly adolescent crypto bros headed by Apartheid Clyde, or Elon Musk as a lot of y'all call him. And they literally want to eliminate the FDIC and deregulate banks, taking us all the way back to the goddamn 1930s. Take a listen as Ali Velshi of MSNBC talks about what's happening.
The incoming administration has reportedly started looking at ways to drastically shrink, consolidate, or even eliminate the top bank regulators in Washington. According to the Wall Street Journal, quote, in recent interviews with potential nominees to lead bank regulatory agencies, President-elect Donald Trump's advisors and officials from his newfound Department of Government Efficiency have, for example, asked whether he could abolish the Federal Deposit Insurance Corporation, end quote. Let me tell you why this is a really bad idea. The FDIC was created during the Great Depression after thousands of banks began to fail. Many Americans lost their savings. Those who didn't lose their money right away panicked and withdrew their deposits, causing what's known as a bank run and causing more banks to close.
My grandmother was born in 1913. She lived through the Great Depression. She told me about how during those times, white folks were going insane, jumping from tall buildings and high bridges when all their money disappeared after the stock market and the banks crashed. The ironic thing is that black folks were cool, just surviving as usual. And the reason is racism. Because bank accounts weren't allowed for black people back then. The banks would not open accounts for Negroes. So our community didn't really feel the pain of the crash like they did, because our money was at home with us instead of in the banks when they failed. And when they discovered why we didn't lose all our money, it became very dangerous for us. Many black people began burying their cash underground or beneath floors to better hide it. Many in our community lost their lives to robbers who didn't appreciate having less than Negroes. But the banking industry took note, realizing the value and opportunity of the black dollar. So when Roosevelt enacted reforms that included creating the FDIC, the banks relented and changed their policy toward serving black customers. These reforms also facilitated the rise of black-owned banks and other businesses. Now let's continue hearing what Velshi has to say.
The agency was created to restore and maintain the public's confidence in the financial system, and it worked. The FDIC began insuring banks in January of 1934, creating stability in the banking system. Banks and savings associations would basically pay small premiums for deposit insurance companies by the FDIC. It's called an insurance corporation. At the end of 1934, only 9 banks had failed compared to the more than 9,000 banks that had failed in the previous 4 years. Today, the broad purpose of the FDIC is to protect your money in the event of a bank failure. It does so through deposit insurance. The FDIC insures trillions of dollars in deposits at almost every major bank and savings association in the United States. The agency will insure at least $250,000 per depositor at FDIC-insured banks. Since its creation, no American banking consumer has lost money that was in an FDIC-insured account, even when the bank fails.
So you see, this agency is crucial in the banking industry to protect consumers like you and me who rely on these institutions to keep our money safe from bank failure. Not only that, but the FDIC further regulates banks to ensure that they follow the fucking rules, so they don't become endangered and put in a position to have to be bailed out in the first place. And herein lies the Trump administration's problem with the agency. The FDIC is standing in the way of their deregulation wet dreams. We have these rules for a reason, but the rules are inconvenient to the evil, greedy finance bros who want to run their shenanigans in peace without regulators looking over their shoulders, including Musk, who's currently trying to strike a deal with Visa to get into the payment processing game on X, formerly Twitter, the social media platform he bought to control the global discourse and interfere with elections. Swear to God, I hate these motherfuckers. But let's continue the clip.
The FDIC has also kept an eye on financial institutions to make sure that things are operating soundly and consumers remain protected. And if a bank does fail, the FDIC runs point on that too. It works to find a solution for the banks and limits the effect that a bank failure might have on the broader economy. It was common during the Great Recession for a bank to fail and shut its doors on a Friday, for customers to have access to their funds from an ATM over the weekend, and for the bank to reopen under new ownership on a Monday morning, all courtesy of the FDIC. Sheila Bair, former FDIC chair during that Great Recession, when some major American banks failed, says if the agency were to shutter, it would be a big mistake. She says, quote, FDIC has a perfect record of protecting insured deposits for over 90 years. Treasury has no expertise in handling bank failures. Changing the guarantor would create confusion among depositors who are comforted by the FDIC insured sign at their banks, end quote.
See, one major problem is conservatives think they are so smart when their economic ideas are the most idiotic and dangerous of all. And the media is complicit in giving conservatives cover for their utter bullshit policies, because most media outlets are owned by greedy, craven billionaires like Jeff Bezos and Mark Zuckerberg. So let's hear from Sheila Bair herself as she explains to one of these TV dunderheads why this is a really bad, no good, wrong idea.
Sheila, I'm glad you're here today because I've actually been thinking a lot about this. I believe there was a bank in Oklahoma that failed in the past couple of months where some of the depositors were wiped out. And a lot of people in the industry feel it's unfair because obviously if Chase failed, they're going to make all those depositors whole. But if this Oklahoma bank fails, well, then they don't. And so we have this two-tiered system right now. So I'm sort of like, you know what? Then put it in the Treasury. And at least we all know at the end of the day, this is taxpayer money that's going to come to bail these banks out and unfortunately probably cause more bank problems in the meantime.
Yeah, so I think those are two different issues. So I don't think I support expanding deposit insurance guarantees to transaction accounts. I think there's a very uneven playing field between the smaller banks that do not have this implied government too big to fail status and the very big ones. So the answer to that is to expand deposit insurance coverage. The problem you're flagging, Kelly, doesn't have anything to do with that. Isn't solved by moving it into Treasury. You still have to change the deposit insurance rules, whether the Treasury is guaranteeing it or the FDIC is guaranteeing it. You still have to change the deposit insurance rules. And if they're suggesting now that taxpayers, with our $36 trillion in national debt, if that's the idea, to move it to Treasury so taxpayers will now provide this guarantee versus bank premiums, which is what's been going on for 90 years, then I think that's a really bad idea.
So here we are, guys. I suggest you contact your U.S. senators and your district congressmen and pressure them to get off their asses and do something to stop this madness. Look, I know we're resting in our 92%, but that doesn't mean you can't reach out to the officials you did vote for who should be working for you and fighting for your best interest. And if you voted for Trump, voted third party, or didn't vote at all, fuck you very much. And your mama too, bitch. This is all your fault. You helped elect that fat, orange, incompetent ass clown. I hate you motherfuckers with an immeasurable passion. On my life, bro, I wouldn't piss on you if you were on fire in a ditch. Stupid motherfuckers. Please like this video and subscribe to my channel for more news you can use. Thanks for watching.